Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, February 6th, 2008. Well, here we are again, guys, and I'm going to just dive right in because there was a ton of things to cover today, from intraday moves to whole moves in the market on the daily. Technical patterns are appearing, and it's not looking too pretty, to be honest. Yesterday we touched on a couple things in the charts that were very, very bearish, and I want to make sure everyone understands what exactly we're talking about. But first, let's start with the intraday chart. And this is the intraday for today, the 10-minute. We always use the 10-minute when we talk about the intraday. And this is the intraday chart for the ES future contract. And this is the ESH8 March 08 contract for the E-minis, the S&P 500. We like this chart mostly because it gives us more pronounced views of the market and the moves in the market to talk about intraday, and that's why we use it. In any case, let's touch on the market right here. Today was a down day, no doubt about that, folks. We saw the NASDAQ dropping 31 points, or 1.33%, while the Dow and the S&P were both down about 0.5% to 0.75%. The Dow was down 65, the S&P was down about 10. Now, what was so unique about the reasons why the NASDAQ was down more than the Dow and the S&P? There's one word for you guys: Disney. Disney. Let's touch on Disney first, folks, because Disney was the reason why the NASDAQ lagged the rest of the market to the downside, and the Dow and the S&P were up more. And that's because Disney is calculated into those indexes, and we saw Disney up nicely today, and we'll show you it on the daily here. And you can see right here, up nicely. And it's sitting right between the 50 moving averages noted on this chart and the 200. So it's in kind of a no man's land, sitting on support right here, but at the same time you got resistance up here. So until we see a more chart pattern, and again, when you have this move straight up off the lows this high, that's a chart that I would stay away from personally, because it's just come up too far too fast. And you see it did close lower than where it opened, and that's why it signals that red area. But at the same time, it's got support here. So it's kind of telling me, yes, it could fall, but it's got support, so it's kind of a no play. And that's what I call a play, is a no play, when you know, it could be a good long, it could be a good short. Maybe it factors one side a little more, maybe the downside, maybe the upside, but it's not enough to warrant any risk of my personal money. And that's when I call it a no play. So as of now on this chart, I say it's a no play. It may go up, it may go down. I have no clue based on the chart. Some things on the chart tell me it's going down. Some things on the chart tell us it's going up. Now, that's Disney. Let's focus back on this market, because the intraday ES market, and here's the ES futures again on the daily, but let's look at the intraday, saw some major moves today. And let's talk a little bit about this right here. You all should know what this is by now, a bottoming tail. And what we know about this is that this is generally a buy signal. When you get this intraday or on a daily chart or any chart, and you get a confirmation on the next candle up, and it closes above this high or breaks that high right there, it's usually a signal that the market's going to move up, and it was no different in this case. Once we broke that high, you see this candle moved up, and it moved constantly upwards here, heading towards the 200. Now, this is the 200 moving average, this green line, and it's major resistance. All right, so you're always moving into the 200. The first time a chart hits the 200, and even the second and third time, it can often be major resistance. If it hits it enough to the upside, oftentimes it breaks and goes higher. But in this situation, as you can see going back here, it did not touch. So this was the first hit, a major resistance, and that's a sell signal. And look at the sell-off that ensued, folks. A major drop in the markets, continued selling all day until basically the close. And as I said, the S&P was down about 10 points here. NASDAQ was down about 31. Now, the crazy thing about this, folks, is right into the close, we saw a bottoming tail again form. And right as the market closed, it started to rally. And after hours, Cisco came out and said, we hit estimates right on, we're okay, things are okay, we made our estimates, and the market started to rally. And Cisco was up about 50 cents on those earnings because guidance was kind of reaffirmed. And they actually said that. I believe they said guidance is reaffirmed. But the negative here is, folks, as the futures rallied, and we were up almost 7 points on the futures after hours, all of a sudden, Cisco, the players at Cisco, the CEO, came out and said, we see many challenging quarters coming. Okay, well, didn't you just reaffirm guidance? Okay, but now you're saying you got challenging quarters coming. So all of a sudden the futures started to drop, and Cisco got slammed. And I'm going to show you Cisco here on the level 2, because this is just unbelievable to me how they can say one thing and then the conference call says another thing later on, and the market tanks. And here's Cisco's level 2. It closed at $23.08, down 18 cents on the day. After hours, it's trading down about $2. That's a big time fall on Cisco, folks. We're talking about a large cap tech here. And this is killing the futures after hours. Maybe killing's a little rough. I don't want to use killing necessarily, but it is dropping the futures after hours. And the crazy thing about this is, after the initial comments on the future of Cisco's earnings and revenue guidance, when they reaffirmed, and I'm using the quotes with my fingers here, as many people do, to say that reaffirmed, we saw that Cisco actually trading as high as $23.50 to $23.75. But as soon as they said that there's troubling quarters, and I'm not saying quarter here, it's plural, quarters, the stock got punished. All tech across the board got punished after hours, and now the futures are trading down 6.5 points. So look at this reversal. By the way, this is after hours. So to see these type of moves after hours is very substantial. So you saw that move up, and then once they said troubled quarters, again, after hours, later in the conference call, look at the dump out you had on the futures. So here we are sitting 6.25 down on the futures. The QID, which is a great barometer because it's 2 times short the Qs, is trading above 55. And QID hasn't been this high, and here's QID. It closed at 53.64 here, up $2 the way it was. Now it's trading up, last print here, 55.07. So we are seeing another $1.50 getting priced into QID approximately on the Cisco news. Now, where does this all leave us? And again, there's so much information. I apologize for not getting to more charts here. It's just we got to cover everything that's going on during the day and after hours. Now, again, as I said, where does this leave us? Let's look at the NASDAQ. Number one, what's this negative here? Yesterday, or here, let's go back a couple days. We had the close above the 20 moving average on the Qs, right? Okay? And we said basically if you confirm that move up, meaning you have to have that move up above the close of that candle here to confirm it, and we did not get that. In fact, we sold off on Monday. Tuesday, we had the big drop yesterday, and Wednesday, the fall continued. Okay? So again, you've had 3 successive down days with the NASDAQ dropping a total of about 125 points. That's a massive drop in 3 days, folks. Not a very pretty sight. Now, the question is, do we retest these lows? This is the next support area. I mentioned yesterday we were at a support area right here, and as you can see, it was the low of this candle, the general low of this candle, and yesterday. Well, we broke that today, folks. The next area of support would be the low from about 2 weeks ago when we had the flush out and we rallied. And the one negative here, I mentioned this on the Qs yesterday, and it confirmed it on the NASDAQ today. If you take the closing candle, on that chart as it just flipped to the side, if you take the closing candle low on the NASDAQ today and stretch it all the way back, and we go back a long, long way, and out here, let me actually get out the weekly chart so we can actually see this. All right. The weekly, and here's the weekly chart. This is the low right now we're at on the weekly. And we draw a candle across the board here. You're going to see that we have not been this low of the close on the NASDAQ in a very, very long time. And let me try and get that straight. So even though we were lower last week, we never closed below where we are now. This is the lowest close on the NASDAQ going all the way back into 2006, right around here. All right, maybe even a little lower, right around somewhere in this area. I just have to extend that. And that's a very bearish sign. I mentioned that on the QQQ yesterday as well. And that was a bearish sign that I pointed out yesterday for today on the Qs. Again, same thing. You had a lower close yesterday and even a lower close today, and we haven't closed this low even on the push down a couple weeks ago. So again, drawing that QQQ line, there we go. We'll stretch it right out. You see we're coming right down to this area, and this might be where we end up. If you draw the line out here, this is some near-term support right here on this low going back to 2007 on the Qs. So we're going to see where this head takes us, but it's not a pretty sight. And I have to say, Cisco after the bell is not going to help Tech tomorrow at all. Tech will be weak on this tomorrow, and we do need to be cautious, and we've remained cautious. And that's the beauty of it. In the chat room today, you look back at the fall since January in this market, and in the chat room, we've had a few plays on the good days when the market's done some great things and had some nice moves here and there, but for the most part, we've kept it very conservative since January. And the key being here, folks, is that you got the markets down 20% in the last month or so, month and a half. The fact that we've been in this chat room and basically, trading here very cautiously has saved a lot of people a lot of money, including ourselves. And that's a thing of beauty because a lot of people have been hurt. And if we can say that we've helped people be conservative here and not lose money, that's a thing of beauty. So I'm very proud of that because in this market, people are getting their heads handed to them. I know countless traders that I've talked to and heard about that have just been wiped out here over the last couple weeks, and it's a sad, sad thing to know that they could have been in the chat room and done all right. So in any case, not to pump the chat room there a little bit, but maybe in the chat room we're not doing crazy plays up and down the yin yang, but at the same instant, you got to know when to be conservative as a trader, and I can't stress that enough because the good times will come, but in the bad times you got to be conservative. You got to play the small gains. You got to take profits as soon as they come. If it's $50, it's 50. If it's 500, it's 500. You grab it and run. All right, folks. So keep a watch of the futures as they go tonight. Asia may get hit tonight as well. Be very cautious. Baidu had a major breakdown today, and I'm going to flip to the daily here. And here's the daily of Baidu, folks. A very negative close below the 200. That's ugly. Have a wonderful day, guys. We'll talk to you soon.